Studios, the Ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, it's a Monday afternoon. I'm Nadine Blaney. You're Danny AQA, and we're happy to be here with you. Can I speak for you in that way?
Yeah, totally. Last time I checked, that's who I was, so that's all good. But what a lovely start to the week, Nadine. We've got the ASX 200 up by, well, about almost 59 points, or 0.8%, and yeah, the COB 200 also almost up by 0.8%, or 10 points.
Well, I think that's why I was so excited, Danny, because we had the local market hitting a 10-week high today. You know, it's all been looking pretty positive. Gold, Bitcoin.
Apparently there was this huge short covering rally on gold that had all the traders going berserk this morning because the price really spiked, but then it's come down a little bit. So they might have all come down, but also Bitcoin is off to the races as well. So huge risk on rally pretty much across the board.
So we will detail all of what helped move this market, but we've got also some pretty big news when it comes to Origin as well. We've had shareholders, just reject that Brookfield consortium offer on the table. So it happened by proxy vote. So it fell short of that 75% acceptance level. So big question, what now?
Absolutely. What's going to happen, and how is the Origin board going to happen and handle it, and also what is AusSuper going to do? But let's move on to the three themes. So I called it an almost everything rally because oil hasn't been a part of the party, but everything has been going up, and it has been Bitcoin baby that has been leading the risk on rally. And a couple of weeks back, I did just again go back to Mike Howell and his call on global liquidity. And he said you get 5 times the acceleration or the push on Bitcoin compared to gold and NASDAQ. And look, he's right, that liquidity seems to be feeding through at the moment.
But we do have data dependency this week.
Totally.
You know, not just data dependency, but also central bank dependency. So we've got the RBA meeting tomorrow. So there's a lot of enthusiasm that we'll see a hold being put on place there, but also expectations for some sort of interest rate cut being built into expectations from the US Fed, even as early as, the first half of next year.
Absolutely.
So there's so many market dynamics happening, but we've got PMIs this week. We've got data coming through when it comes to jobs as well. So this, it's a big week.
Totally, really big week because the US always focuses on that jobs data that comes out. So the ADP, anyway, we'll get to that later on, but it is lots of data. Maybe we should check in on some of the sectors and see how they did today. And I think we should have utilities. There we go.
Well, which is a bit of a fizzle because it was really the miners that led this charge higher today. If we're taking a look at positivity, Infotech was the best performing sector, A-REIT's best performing sector. So really looking good. Even consumer staples and consumer discretionary. And I had a good chat with Louise Bedford from tradingdaygame.com.au, and she was saying that the consumer staples charts are actually looking really dismal. Down, down, down is what she is saying going forward. Metcash was one of the stories as well, but again, we'll get there in just a moment.
Well, of course, there is that government, they're having a Senate inquiring into price gouging or whatever between Coles and Woolies. So that wouldn't be helping at the moment in terms of consumer staples, but you're absolutely right. The REITs up 1.6%, information technology up 2%, and materials up 1.5%. So very, very interest rate sensitive sectors, and also that exposure to those higher, the sustained high in oil prices.
So you mentioned oil. Also Woodside Energy being the only Aussie energy company to sign a charter at COP23 when it comes to decarbonization. And setting some targets there. So there's just a tidbit in relation to Woodside today. But the story of the day really is the Origin rejection of that Brookfield consortium. There was lots of conjecture around this bid. There was, it's taken a long time to get even this far. But now the question is, what happens? Does the board break up, the company?
Who knows? I think there's more water under the bridge from this one. I was chatting to Tim Buckley today, not only about what's been coming out of COP28 in terms of renewables, nuclear, but also too, will you actually see Brookfield? They've been defeated with AGL, they've been defeated now with Origin. What are the next steps for them? And also, what are the next steps for Australian super? Are they going to step up to the plate with other other superannuation funds to be part of this massive transition that Australia needs to invest in going forward. So I think watch this space, but there's more to this story that could emerge.
When it comes to Coles and Woolworths, of course, we've got the Greens calling for a Senate inquiry into price gouging. I guess that's what you would call it amidst this cost of living crisis. Look,
it's a bit of a non-event, really, because we do have Aldi, we do have Metcash. They are a duopoly, but at the end of the day, it's not like there isn't competition. And we spend a lot of time going to farmers markets. I was thinking,
you do personally.
Yeah.
I thought you and me. I thought I haven't done that.
No. We, as in my husband and I, we love a farmer's market because those veggies are just amazing.
Who doesn't love a farmer's market? And Harris Farmer's Market as well. I cooked up some beetroot yesterday.
Yum.
I think it was $1 something a kilo. Anyhow, we digress. Metcash was out with its interim results today. Share price responded accordingly. In fact, did really well. It was a stock of the day, though, and I've got to say my guests weren't quite so enamored with the company. Let's take a listen.
Things have underperformed a bit, which is logical with inflation coming off. Consumer spending cycle, I'd expect, we all expected it to slow down. It's taken longer, which is amazing how much credit that consumers have been able to get access globally. Even in a tightening cycle, but I think that'll eventually bite. So in that context, everyone's worried, and it makes sense. So I'm not jumping in to pick the bottom here. Metcash is doing okay. I don't think they're struggling, but I think the overall cycle is tough. I still think Woolies is the best of the lot, but I'm not buying Woolies here, so I'm definitely not buying Metcash.
So I certainly didn't get enthused about it when I read it this morning, but it was okay. And that's about all you can say. And if inflation does continue, which I expect it will, not necessarily at sky-high rates, but no time in history has inflation proved that transitory, that it came and went in such a short period of time. It just doesn't happen. And we always talk about it's going to. Every time in history it was always going to be transitory, but it never was. So, you can't do too wrong in being in one of these in the space, but I also still prefer Woolworths to Metcash, although Metcash is on a PE of only 11, so it's actually pretty cheap compared to the other two. But in the longer term, I'd rather be with a better company.
So, Danny, they nominated Woolies as their preferred pick in the grocery space.
Yeah, it's normally the best pick in terms of quality, so there you go. Now, do we have, well, hopefully we're going to welcome to the COB Josh Gilbert from eToro. Josh, who is that man without the tash?
Yeah, Molus. 1st of December came and I think everyone thought it was best to go, so it's gone, yeah.
Yeah, and the markets are celebrating, including Bitcoin, up above 40 grand. So what do you make of this rally of everything, pretty much, as Danny called it?
Yeah, obviously a lot of this optimism is generally coming from the expectation that the Fed is going to be cutting in the first half of 2024. We've sort of seen markets pricing in as early as March. Obviously, really that doesn't look to sort of really be coming fully into play until May. But it's just sort of really driving a lot of optimism at the moment. Obviously, Jerome Powell and other Fed speakers are sort of doing what they can to sort of try and talk down rates, but the market is just sort of not really listening to it, and obviously US PCE was good again on Friday as well, and for the time being Jerome Powell is sort of going to continue to, as I say, try and talk this market down, but it doesn't seem to be listening for the time being.
Certainly doesn't, and it's been taking not only Bitcoin but gold with it, and there was a bit of a short squeeze here in Australia this morning. It had a few of the traders going. Josh, do you think we can get more upside into that shiny metal at this stage?
Yeah, I think so. At the end of the day, I think a lot of what is driving gold prices this year is obviously coming from the sort of the buying that we're getting from central banks in the first 9 months of the year. Central banks bought, more than 800 tons of gold, on track to sort of surpass 2022's record in that time as well. So, China is sort of leading that as well in terms of buying. So, they're buying more gold than we've ever seen before. Interestingly, though, it's we're seeing that lag from an investor retail standpoint. So we're seeing outflows from the likes of gold ETFs compared to sort of what central banks have been doing. So it's a bit of a mixed sort of bag, really, especially when we've seen the dollar rise overnight as well. But I do think there's a little bit more upside to gold from here as well.
All right, let's talk about what's to come this week. We've got RBA, we've got Chinese inflation, we have PMIs, we have US jobs. Like, this is not a week to sort of set and forget, is it?
No, yeah. I hope no one's going on their Christmas holidays too early, because you're going to miss a lot. But it was, yeah. I mean, look. Firstly, if we start with the RBA, I mean, they had a nice little Christmas surprise last week from that inflation data and obviously from that retail sales data. So I don't really think Michelle Bullock's going to be in any rush to sort of raise rates tomorrow. She could still be the Grinch. That could still come through though, because she has, again, continued to sort of take that hawkish stance. We've seen that over the last sort of couple of weeks, reiterating that inflation is becoming sort of homegrown, more persistent than sort of expected as well. I think that keeps markets on edge a little bit as we head into the new year, kind of not really expecting that rates are done. But I think the good news for investors is that they're unlikely to see a hike this week. But as I say, I wouldn't be riding off the expectation that we're sort of finished there. And then I think Chinese inflation is going to be sort of another big one to sort of keep an eye on, especially given that it fell into sort of deflation last month. Still sort of continuing to see spending being pulled back. That sort of property crisis is sort of really having a huge impact on the consumer. It's affecting everything from jobs to wages, people feeling uneasy. But when we do tend to get sort of bad news from China, it's not always bad news, because that can sometimes be good news. It sort of stokes those sort of stimulus talks. It sort of really gets sort of the market excited that we might get sort of more support. And it has been the market that has really disappointed this year. So I think investors will be looking to sort of China to sort of see what data can come from there, to see if there's going to be some more optimism coming next year.
Josh, with such a rally having gone on, how would you position at the moment going into year end? Is there anything that you'd still like to be buying at this stage, or is it a case if you haven't bought, you might have missed that one?
Look, I think there is a little bit of risk in terms of buying at this point, given that huge move that we saw in November. Obviously, the ASX, sort of the best month of the year since sort of January, some huge moves from obviously US markets as well. And I think it does leave a little bit of risk there, in the sense that we could see a bit of profit taking before the year ends. And that gives a little bit of a potential for a short-term pullback. But I think that there's a focus really on inflation easing, rate cuts on the horizon, and ultimately we sort of tend to see that strong seasonality coming in. And I think that should help the market push through to year end. I'm not sure we're going to see any sort of huge gains into year end. We're starting to obviously see some, those risk assets perform really well. Obviously, I think Bitcoin is the sort of the key example of that. That has got, other catalysts, including these ETFs that are expected to be accepted in sort of January. You've got a Bitcoin halving in April as well. So there's other catalysts outside of that. But yeah, I'd be sort of wary of sort of jumping in terms of putting in a huge lump sum at this point in sort of the day. But as I say, there's certainly positioning going on for the new year. But I think investors have got to keep wary of sort of that rotation that we see that's going to potentially be happening next year into some of those unfavored assets, into some of those sort of cyclical names that have really underperformed this year.
All right. Well, Josh, thank you for joining us. You've given us the day with a bow around it and talked to us about the week. I hope you have a good one.
Thanks, guys. Take care.
Josh Gilbert there joining us from eToro. So
we better check in with the leaders and the laggards today and see what's happening. And Chalice Mining up there by 12%.
There was some talk that there was some news out of Indonesia that has driven the share price higher, but I didn't see anything really specific relating to Chalice. So just keep that in mind. I also didn't see anything very specific to Star Entertainment.
I think that's
but
in
it's been so
news.
volatile.
Yeah, very, very volatile. And Genesis Minerals up 6%. Iris, interesting.
Yeah.
A few brokers upgrading that one at the back end of last week. So that one continuing to rally. But then again, it had been such a terrible underperformer.
Laggards, if we take a look at what really did lead or lag the market, Helios again, just still more trouble there, talking about restructuring, possible Origin Energy, the story of the day, down by 4%. And QBE, again, I didn't see anything associated with
probably
maybe
bond
interest rate
yields.
cuts, bond yields.
Yeah, probably bond yields.
And then lithium has just been in a bit of a spot of bother.
It
at times.
has. And what about some of the small caps? Let's have a look at those. Hutchinson up
Meyer's an interesting one.
14%. Jess Meyer is up 12% almost.
I wonder if that's anything to do with everybody saying that when they're at the shops on the weekend, it's just being really, really busy.
Really?
Yeah.
Oh.
I mean, my husband came home and said, what spending crunch or what cost of living crisis?
Wow,
Yeah.
people still going. Well, that's not good. The RBA won't want that one. And Allcan Resources up 9%.
And the laggards? Let's see what's on this list.
Anything that catches your eye?
Well, Brainship was one of the worst performers today, but who knows why?
It's so volatile, and Highfield Resources off by 13%. So let's check in and see what is happening overnight. And we've got Eurozone, Centix investor confidence, and US factory orders. We're going to have to wait a little bit.
Yeah, it's a little bit of just a tease for what's to come later in the week. And of course, tomorrow here, we've got the RBA. We had the Aussie dollar hitting a 4-month high today, so there's plenty of expectation when it comes to rates, so that will be the big one. We've also got balance of payments and government finance, but to Josh's earlier point, we do get data out of China, and it starts with the Caixin Services PMI that comes tomorrow, ahead of what we get in the United
US,
States as
yeah,
well.
absolutely. So definitely a big days. And well, we've pretty much summed it up, haven't we, Nadine? So the market looks like it's closed out, the ASX 200, up by 51 points or 0.7%, 7,124. And the CIBO 200 also up by just over 0.7 or 10.25 points.
So not quite at the highs of the day, but look, we'll take it to start this, the
Absolutely.
first full trading week of December. We'll see what the market brings, see if that Santa Claus rally comes to fruition. And if you've missed any interviews we've done today, which touched upon all of the aforementioned, you can catch up online at ausbiz.com.au.
So have a great evening. We'll see you all bright and early at 9:30 tomorrow morning.